Good afternoon. Welcome to our first weekly livestock market update of the new year. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We are kicking off 2018 with a pretty slow start to the new year. As we take a look at the markets, let's start with a recap and start first with the hogs, and then there's a little conversation we should probably have about the cattle markets.
Yeah, absolutely. We'll start with the positive news for the week. When you think about hog markets, I'll call cash hogs up about 225 for the week. If we look at the current lean hog futures contract, at least where we set to at this point in time, I'm going to say basically flat for the week there. So good news in terms of where hogs went. If you look at the pork cutout value, it was up $1.16 for the week, led by belly prices that were up more than $5.40. For the week. So very good news in terms of some higher hog prices during the week. I think we would have started the week thinking we were going to have higher cattle prices as well. But as we kind of go through this, we'll see that hasn't really played out. If you look at feeder cattle markets, still we started early this week with a lot of them with very limited runs, or in fact, some of them probably not even holding sales. Given the start of the new year. So not a lot of tests available for us to say much about feeder cattle prices. On the fed cattle side, if we'd have taped this maybe yesterday, I would have said we might have seen a little strength in cash cattle prices, but I think we're going to talk about them basically flat given what's been going on today. If you look at current live cattle futures contracts, I'm going to call them down $4 for this week, and the current feeder cattle futures down about $3.50. For the week. And as you look at feeder cattle futures in particular, we were up more than $3 early in the week to now end up $3.50 lower. That $7 move lower, let's hope that doesn't continue for a period of time in front of us. On the choice beef cutout side, we were up $5.15 for the week, so strong move up there. Really led across the board with strength in many of all the cuts that make up that choice beef cutout value.
Scott, as we take a look at the cattle side of things, you mentioned we started the week off incredibly strong. We came out of the holiday with sharp moves higher, but at the same time, we've seen it drop off. Now, my question is, you see a lot of correlation between what happens in those wholesale prices and maybe what happens on the future side of things. We've seen a lot of strength in the wholesale sides this week. What's contributing, or what are some of the factors maybe that are contributing to this drop off?
Yeah, so I think you still have some coming back from a long market holiday that may still look at last cattle on feed report and see some negative there. However, I think we just keep the same balancing act going on in these markets of, we know we have a lot of supplies of cattle and beef coming to the marketplace, as well as competing meats in 2018. What happens on the demand side is really important. And when you start the week with now what's stronger choice beef cutout values, all of a sudden I say, hey, that demand side's hanging with us. So perhaps all the move we've seen this week in futures markets won't continue to bear out as we move forward into next week.
One of the things we do have today to talk about, jobs report came out this morning. Really another good month and another big month for jobs here in the U.S.
Yeah, so if you look at that report, unemployment rate stayed at 4.1%. Again, we added 148,000 jobs in December. That's a little less than maybe we would have thought before the report was out, but still, all in all, a very strong report that we got on the job side. And you look and I go, stock market here after the first of the year, it's hitting fresh record highs. Probably as we speak, we're going to be higher yet again today. It just tells me that recovery in the economy, that's what we need right now in many of these meat markets, given what we know are stronger supplies coming as we move forward.
Is that also part of what goes into our domestic demand, and knowing that while we still rely on growth in exports and growth in global demand for our products, we can't lose our domestic demand here in the U.S.?
That's correct. And when you look, we are going to eat a record, well, I shouldn't say a record, but certainly a much larger increase of meat consumption occurring in the U.S. this year, and perhaps close to a record when it's all said and done. We need more consumers consuming more product, having more money in their pockets. I think all of that is very helpful. And again, a larger majority of what we produce in this country today is still consumed domestically, and we don't want to forget that the domestic market might actually be what helps us keep livestock prices at or near levels that we saw for much of 2017 as we enter here 2018.
We've talked a lot about how successful trade was in 2017 and how we hope and we're looking for that to continue into 2018. One of the things we haven't talked about as we look at the big picture of economics is exchange rates. How did that play into the role of what happened and how U.S. goods and services played on the global market?
Yeah, I think a lot of the rhetoric of late has been, so the dollar strengthened and hurt our trade if you look back a couple of years ago. Yet when you go back and look at 2017, our dollar actually weakened again against a number of these currencies, making us more competitive. If you look at beginning of 2018 relative to the beginning of 2017, for example, relative to the Australian dollar, the U.S. dollar weakened 7.6%. Relative to the Chinese currency, we're down 6.8%. Even South Korea down over 12%. All those things, again, make our products more competitive on the world market, whether it's a competitor like Australia or a consumer like South Korea. We like that move. Now, I don't want us to forget that the dollar is still a lot stronger than where we were back in 2010. Relative to the Australian dollar, we're up 16.7% here at the beginning of 2018 relative to the beginning of 2010. Relative to the Japanese yen, we're up over 21% relative to that 2010 level. So, still stronger than where we were when we were back in 2010, but it's nice to see a little bit of weakening that occurred for many of these currencies during 2017.
One of the other things I think that's interesting is we talk about population changes from one year to the next. Talk to me a little bit about where we saw the most growth in 2017, and does that give us an opportunity to look at emerging markets for U.S. products? Yeah,
so very good question. Number one, when you look at kind of global population and what it did during 2017, we grew about 1.1% in the world. That's roughly adding about 83 million more people in the world, and we need that to happen. That 1.1% growth. It's good to keep that in mind relative to what we grow overall meat consumption in the world. It gives us some idea of the balance. Do we have to consume more or less? And so that 1.1, we might like it to grow faster given what we're doing in terms of domestic meat supply growth right now. But when you look at where that's happening, all right, so Africa jumps up right away with about 40% of the overall growth in global population. They were up 2.5% during 2017. That African market, although we continue to look at a lot more people, for me, it's a lot more about what kind of money do we end up with in the pockets of the folks in Africa so they can afford more meat products or more meat protein as we move forward. Even China, I moved down a little bit, only up 0.4% in terms of population growth, yet that's another 5.5 million people in China. Those numbers all make a difference to where overall consumption goes in total, and we'll continue to watch that population growth moving forward. Now, you take a country like Japan, actually down 0.2% over the last year, so a population that modestly moved lower during 2017.
It'll be interesting to watch, and I think the economic factor of that is a really interesting aspect, especially when we look at Africa that are seeing such large population growth, and the fact that their economies are what is pretty much holding them back.
Yes, just finding that niche for them, if you will, of how can they generate more income to begin to move themselves up, because once that starts, it probably then helps from a meat standpoint. So what might be the protein sources today versus the protein sources 10 or 15 years from now? You hope as they get more money in their pockets, they make that same shift towards more meat protein and away from some of the other proteins that they might use now. And I think that's all helpful. But that money in their pocket, I think, is going to continue to be a challenge here in the short term, at least.
Scott, there's not a ton to talk about this week market-wise, just because it's been a slow start. I don't think, though, that we can escape our conversation today without talking a little bit about the weather. I'm in North Carolina, and coastal parts of our region and up the coast are being hammered with snow and freezing temperatures, which is quite unusual. Not necessarily unusual in your part of the world, but the weather out there hasn't been kind to livestock production and markets either.
Yeah, that's right. So this is all going to cut multiple ways, and I think it's hard to deduce. And I'll sometimes say I think markets are looking for information this week, and talking about how cold it is a pretty easy conversation to have. But certainly we likely have a little bit of slowdown on the consumption side from what's been happening on the East Coast in particular, where there's been a record amount of snow and probably making it difficult for folks to get out and consume quite as much meat as otherwise might be the case. You don't maybe make that up very well on the food service side, but at some point, hopefully we'll get some warmer temperatures and give folks a chance to get back out, and we'll catch up on that demand side. But some have been worried about what's been happening on the demand front as a result of the extremely bitter cold, and in some cases flooding and record snows. I mean, it's been quite an interesting few days. But when you shift back here into the middle part of America and talk about what's been multiple days below freezing for many of us, even abnormally cold in many parts of cattle country, you're probably really hurting rates of gain for cattle in the feed yards right now, and that ought to keep weights lower here for a period of time. So that ought to help us on the supply side. So I don't know how those balance, but both sides of that picture certainly are important, and it has been an extremely cold start to 2018 for many of us around the country.
We talk about what it does on the cattle side of things, but does it also potentially back up marketings on the hog side of things with challenges to move animals and to get things where they need to be?
Well, I certainly think it makes things more difficult. I don't think we've seen, for many parts of hog production country, significant amounts of snow that kept us from getting to market. So I don't think we've done too much yet at this point to slow down the movement of hogs to market. But anytime you're talking about zero or below zero weather, it makes folks decide to wait just a little bit longer, hoping for a little warmer weather before they move any kind of livestock. So we'll wait and see how things unfold. It looks like to me we might get a little break here over the next few days as well. All of that hopefully will be helpful to keeping us a little warmer than we've been here for early 2018.
It'll also be interesting to see what hog weights do next week, to see how maybe that there's some change or some fluctuation there.
Yeah, so again, we shouldn't forget, we know we got more numbers coming regardless of the livestock species that you want to talk about. The one way to help at least slow down or moderate the overall growth in production is through weights, and hopefully in both the cattle and hog side, we might get a little bit of help from what's been this little bit of cold weather now.
Scott, as we wrap things up, reports that we're looking out for next week.
Yeah, so we're going to get a chance to look at monthly trade data out of ERS on Monday, and then we'll also get final crop production numbers from USDA with the crop production release on Friday, as well as the monthly WASDE release will come out. We also will get a shot of more retail prices on Friday, so we'll get a little better look of where meat prices have been here over the last month.
Sounds good. We look forward to seeing you next Friday, hopefully.
Very good. I hope I get to see you again next Friday as well.
All right. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Look for the weekly livestock market update. Click subscribe. You can also submit questions and comments there as well. And for market updates, check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.